Welcome to The Explainer. Today, we're building a high-octane playbook designed to help you completely shatter your current revenue ceilings. We're diving deep into the key takeaways from the Mastermind 2026 sessions, pulling together the absolute best insights from 15 different expert presentations. Okay, let's jump right into this, because the core theme we're unpacking today is a massive paradigm shift. We're stepping away from this old idea that just stockpiling more product knowledge is your ticket to success. Instead, we're going to see exactly how relentless, focused execution discipline is the real driver behind top-tier performance. Look, we've got to start things off with a bit of a wake-up call. Out of the roughly 177,000 active originators out there right now, the median production is sitting at just $4.9 million. To put that into perspective, that practically means half of the entire industry is taking home less than $50,000 a year. It's a sobering statistic for sure, but it perfectly defines the reality of the baseline we are all working from. But then, you see a number like this, $73 million. That's what the top 1% of producers are actually closing. The gap between that median baseline and this top-tier number is just absolutely massive. We aren't talking about a slight edge here, we are talking about a completely different universe of business. So the obvious question is, how on earth do we bridge that gap? Well, the thesis for our entire explainer today is that the bridge across that huge $73 million canyon is not what you think. It isn't having slightly better rates than the lender down the street, and it definitely isn't about memorizing 50 different loan products. It's actually execution discipline, applied relentlessly to the right daily activities. And to get you across that gap, here is our playbook. We're going to cover mindset and identity, then communication as revenue, jump into systems, AI, and scale, and finally wrap it all up with your next day action plan. All right, section 1, mindset and identity, the performance infrastructure. You know, every single high output session converged on this one truth. Your production ceiling is psychological long before it's operational. Expert Barry Habib pointed out that we generate around 60,000 thoughts a day, and those thoughts literally trigger biology that makes us either magnetic to clients or totally contracted. So what's holding us back? Well, Tim Brahim introduces what he calls the law of diminishing intent. Basically, if you have a killer idea and you wait around to act on it, the probability of you actually executing it basically drops to zero. To fight this, Brahim argues you need to carve out 1 6-hour block per month exclusively to work on your business, not in it. That's 72 hours of annual focus strategy time. And trust me, that accounts for way more growth than a whole year of just reacting and scrambling. Building right on top of that psychological infrastructure, Casey Granston identified a massive career killer. She calls it the attachment trap. It's that exhausting never enough cycle, where high performance just turns into this frantic search for the very next deal. And honestly, that leads straight to burnout. The cure? You've got to shift your focus from being attached to results to being fully committed to the process. Think about it. There are roughly 225 working days in a year. If you focus purely on your controllable daily inputs during those 225 days, instead of stressing over the totally unpredictable outcome of one single deal, all that chaos just disappears. Moving right along into section 2, communication as revenue. Let's be real, mortgage rates move every single day and products are available to pretty much everybody. So mastery of communication is actually what structurally protects your business from just becoming a commodity. It's how you build a giant moat around your career. Kelly Marsh frames this perfectly. She uses this brilliant draw a bat exercise to prove her point. If you tell a room full of people to draw a bat, half are going to draw a flying mammal and the other half are going to draw a baseball bat. We constantly assume this shared context with our clients that literally does not exist. She shared a great example of a transaction hitting a snag. Usually, the lender's team goes completely silent while they frantically try to fix it behind the scenes. To the team, they are working incredibly hard. But to the client, silence during a crisis just feels like total abandonment. It creates massive anxiety and it instantly kills your chances for future referrals. So how do we fix this upstream before the client is even on the phone? Josh Metal offers these 5 laws of marketing. Notice the massive shift here. Instead of just broadcasting to the world, hey, I close loans, you are demonstrating exactly how you solve their specific problem. You strip out the jargon, you show them a faster timeline, and you prove your probability of success. By leading with their problem rather than your generic solution, you stop being background noise and you start becoming a magnet for your ideal clients. Okay, let's hit section 3, systems, AI, and scale. Listen, at this stage of the game, artificial intelligence is not some futuristic sci-fi gimmick. It is vital infrastructure that completely removes friction from your day-to-day. And to properly scale, Becky Staples uses this really clever doctor versus nurse analogy for structuring your team. It's all about adopting a who, not how mindset. If you, the leader, the doctor, are getting bogged down in file management or mid-process communication, then you are the bottleneck holding your whole business back. You should strictly be handling diagnostics, business development, and high-level CEO check-ins, while your processor, the nurse, systematically handles the entire middle of the transaction. Now, operational scale also means market scale. Larry Gonzalez hit the nail on the head when he identified what really kills mid-level producers: being a secret. You could literally be the absolute best lender in your entire city, but if nobody knows it, you don't have a business. Dominating a niche requires real social media saturation and a highly visible presence. Being a secret agent is a surefire way to totally stall your growth. Remember, you're a lender, not James Bond. And the data completely backs up why these communication systems are non-negotiable. Look at these numbers from the executive panel. If you have zero contact with your database, your retention rate is a dismal 19%. But simply implementing 3 or more systematic touches a year, that retention rate literally triples to 57%. Your database is your bank account, and this data proves that most originators are just completely forgetting to make their withdrawals. Which brings us to Section 4, your next day action plan. All right, let's ramp up the energy here. We've covered the mindset, the communication, and the operational systems. Now we're entering a rapid-fire sequence of high-return commitments that you need to make before tomorrow morning. Action number 1, run a Monday, Wednesday, Friday proactive update system on all your active files. Remember what Kelly Marsh taught us? Client anxiety kills referrals, even if the loan closes perfectly. So systematize those updates and kill that anxiety entirely. Action 2, grab your calendar right now and schedule one 6-hour block for this month. This is your dedicated on-business block. You are not allowed to work in the business during this time. You are strictly working on the overarching strategy to grow it. Action 3, map out your referral database. Group your contacts into tiers and assign a minimum 3-touch cadence per year to your Tier A and B contacts. As we saw earlier, just hitting 3 touches triples your retention. Please do not leave that money on the table. Action 4, stop being a secret. Pick a specific niche you want to dominate and start posting about it 3 to 4 times a day. Claim ultimate authority in that category. So whenever someone thinks of that niche, you are the first and only person that comes to mind. Action 5, I really challenge you to try this one this week. Take one complex client scenario and feed it into an AI tool. Use it to build an interactive, highly visual planning output for that client. Jeremy Forcier noted that you can turn a task that takes 15 hours of manual work into just 1 hour of incredible visual output using AI. He said it led to the easiest closings of his entire career. Action 6, time to fire yourself. Look at your daily operations, write down the 2 specific tasks that drain your energy the absolute most, and immediately define a role to hire for them. Think back to Becky Staples' doctor and nurse analogy. Ask who, not how. You are the bottleneck right now, so fire yourself from that low-leverage work. Action 7. On your very next pre-app call, try Tyler Osby's framework. Be radically transparent, show them exactly how the money works, and then ask for loyalty before you invest hours of your labor. Ask them directly if anything would keep them from working with you. Close the door to your competitors early on. And finally, Action 8. You've got to face the truth. I want you to go back and ruthlessly audit your last 5 lost deals. Don't just gloss over them. Look at the exact timeline, review all the correspondence, and ask yourself a really hard question. Which brings us to our final takeaway. When you look back at those lost deals, was it genuinely a product failure, or was it actually a communication gap? Take this execution playbook. Go out there and bridge that gap.